Hi, everybody. Josh here with Forex Profit Model, and I've got Russ Horn on the line, and we've been chatting a little bit about his system, his new system, Rapid Results Method. Hi, Russ. How are you?
I am great, Josh. How are you doing?
I'm doing very well, thank you.
Thanks for having me.
Not a problem. I know you're a busy guy. I'm glad we could get a chance to talk here.
It's been a hectic couple of months for sure. It's all good, though. Always got time for Josh.
Well, I've got a couple of questions here, and I think that quite a few people are going to be interested in wanting to know what your take on this is. There's a lot of people that they say that if you can stick with Forex for the first 3 or 4 years, and beyond that, like you'll kind of start to turn a corner. But I heard that you said one time that you got so fed up with it that you took a week or a year off. You just quit the whole thing for a year. What experiences led you to that? Like what happened? Like, why did you just say, screw it, I'm done?
Not many people know that was the case. And I don't think I've said it too many times, so good for you, man. At the beginning, I did start it. Like, I got on the road and I started learning and trying to figure this whole thing out. And, a year into it, maybe it wasn't even quite a year into it. It was more 9 months or 8 months or so into it. I found it honestly to be too hard. Like, it was too much. I was doing it on my own. I didn't have any kind of outside help or influence or anything. And I was kind of at that point where I was so deep into it now that I subscribed to every newsletter. I was buying every bad system that I could find. I was in all the forums. I was trying to just learn so much, and it was too much. It was too much of not the right information. And when I tried to apply it all, I just couldn't make it work. Like, it just didn't work out for me. I was learning all the wrong stuff. My emotions were running the show. I'd remove my stop loss, and just that nonsense that you hear about. Every new trader goes through it, and I went through it, and it was enough to make me quit. Like, I blew an account. It wasn't a huge one. It was $800, I think, was that very first one. But it really kind of led me to the belief at that point that it just wasn't for me. It wasn't something that I could make work. So I stopped doing it. And when I stopped doing it, I actually found quite a lot of relief. I wasn't so stressed out anymore. But at the same time, I never went away from it. I stopped. I threw my hands up in the air and said, that's it. I'm done. But the very next day, I was still looking at my charts. And I found this throughout the course of that 1 year that I didn't trade or try to learn. I still kind of would, secretly look at a chart, pop up my MetaTrader platform and, okay, what am I getting myself into? Close it down again. But it always came back up, and I always sort of snuck in there and kind of took a look. But yeah, for about a year, I really sort of sat on the sidelines because I found it to be really, really hard. And being that I was doing it on my own, I was learning all the wrong stuff, and it was too much. And that's really it. Finally, I did have an epiphany. Now, is ridiculous epiphany, really. It's common sense is what it is. But when I was in the shower one day, I realized, I don't have to trade live money, first of all. I mean,
right.
And then second was I did have the ability to determine the lot size that I traded. So I didn't have to trade, I didn't have to trade big enough account, like a lot size, that it would hurt me if I lost. And I didn't have to trade all the time, and I could trade a longer time frame. I think I was trying the 5 minute or the 15 minute or something, because I just wanted to get in the market. And the combination of these three things is really what brought me back into it. I always had it in the back of my head, like way in the back of my head, that maybe I can do something with it. the initial frustrations were so much that I wanted to quit. But then, a year later, I realized, wait a minute, I can go slow. I don't have to jump in with both feet. I can go slow and do it properly. And that's how I got back into it.
That kind of leads me into my next question. There's kind of there was that question, and this is kind of a part two. Like you said that you were able to, or you were learning a lot of the wrong information and a lot of the wrong stuff, and then you realized you could go slow, and what was that right information that you were talking about? Like what, getting connected with the right people, learning the right information. Where was that for you?
In the beginning, I did find a couple of individuals that I sort of stuck to a little bit closer to than the others in a couple of different forums. One guy had his own site, and so I kind of isolated myself as far as everybody else went and sort of listened, to what this one guy was saying. And just by exposing myself, because he was successful, like he did really well. He was a genuine trader, and he did well, and he really had my interest at heart. And just from that, I mean, I don't use the trading systems that he used or anything like that, but I did notice that he went slow. It wasn't a panic. It wasn't him against the market. It just kind of was, it was spiritual almost. The number of indicators he had on his chart were very few, a couple of moving averages and a MACD kind of thing. So he wasn't looking at information overload. Like he wasn't getting stressed out about it. And if he lost, he lost. Like it wasn't a big deal. And he had set a percentage, for him, he never risked more than 1% of his account. And all of these kinds of things, I think we all know, but until you actually see that applied or can see how it actually works, you don't really take it in as truth. It's common sense, but I mean, this really is the way you have to go in order to make it work. If you try to load it up, you get too many indicators, your lot size is too big, you're risking 10% or 5% of your account on each trade because you just want to make that money, and it all works against you. And just being around a couple of people that have done it and are doing it, consistently, and just seeing how it worked. They didn't have too many indicators. They weren't trading 15 different currency pairs. They weren't looking at 5-minute charts and trying to get every single setup there was. There was a relaxation behind it. And that was, for me, sort of the road in the right direction. From there, I was able to make my own way, I guess. But he pointed me in the right direction. And from there, rest is history.
Well, cool. We're very glad that the rest is history, man. We're glad that you did not give up. I think that speaks a lot to people that are struggling right now. They've been doing it for a while and they're ready to give up. And I think that hearing that from you, it's okay to feel that way, and it's okay to actually give up for a while and take a break.
I've suggested it to people too. If you're feeling so strung out and so frustrated and so stressed, give it a break. I mean, you don't have to abandon it. You don't have to never come back to it, but you might want to take a month or 2 months or however long you need just to settle down, because break is a big deal. Once you come back after a break like that, you really do approach it quite differently.
How did you know? What was the catalyst for you coming back to trading?
It was that incident I had while I was in the shower that one time. I realized I have more control than I thought I did. I can limit my lot size. I can pick and choose the currency pairs I trade. I can miss some trades. Those kinds of things where the control now is more me, not the market. And it took me a long time to actually come to that conclusion. And it sounds odd, and it sounds like, well, I mean, that's really common sense. But it did take me a long time to figure that out. And once I did figure that I had more control than I was giving myself credit for, then I was willing to give it a second shot.
When you're learning a new system, like whatever it is, whether it's developing a system with like Rapid Results, or you've gotten a hold of another system by somebody else. When you're learning it, like how do you go about it? Like what's your step-by-step process for learning that new system, whatever it is? Is it like one pair at a time? Is it one time frame? Like how focused do you get on things, and what's your focus on?
I think the way I approach somebody else's system versus when I develop might be a little bit different. There's a certain set of criteria. You have to have an entry, a stop loss, a take profit. I like to see some trade management of some kind. Risk management really is up to the individual trader, how much you place on a trade. And so, but when I'm looking at, say first of all, at somebody else's system, I'll make sure that I understand the rules that they had set out. The developer of the system. I know a lot of people would get a new system and then right away start messing with it, trying to.
They try and break it.
Yeah, they start thinking they don't even know how it performs, and they're already trying to make it better by adding this indicator or this or whatever. So really, I pay attention to what is suggested by the developer, the time frame, the currency pair, if there's a restriction there, and so on. And then there's just a lot of back testing, just scrolling back in the charts and then going forward and just seeing how the thing works. And essentially, first, I'm looking for the entries. And I think every trader does. That's kind of, you're in the market. Now it's, make or break time. You're going to make some money or not. After that, you're looking to see, are the stop losses, are they in reasonable places? I'm not looking to win every trade. At the very, very beginning, most traders, I'd say all traders probably are, but it doesn't matter if your system can't. No system can. So it's not a big deal. But I am looking to see, okay, is this reasonable? Are we making reasonable stop losses? Are the profit targets reasonable? Are we aiming for way too much, or are they going to be too small? There are some systems out there that aim for 20 pip targets but have 50 pip stop loss. That generally doesn't work out so well in the end. In the perfect market conditions, that might work out, but eventually it's going to come back and hit you. So these are the kinds of things that I'm looking for in somebody else's trading system. How clear are the signals? Is there a lot of mechanical ism to it, or is it something that I have to really consciously make the decisions on? Is it more discretional? But then when it comes to my own trading system, I have all of these criteria already in mind. I need to have some of the best entries that I can. I don't want to be selling at the bottom of a move or buying at the top of a move. I want to try to capitalize on the rollover or the trend, as it were. So I'm looking for that. I'm looking for the stop loss. I'm looking for reasonable profit targets. I'm looking for a reasonable frequency of trades. Like, I don't want to trade once every 4 or 5 days kind of thing, once a week. If I'm looking at a 1 hour, I'll usually start with a 1 hour time frame, and I find it has the nicest move to it. So I'll start with that. And then if I can find something that I put together that I like works on the 1 hour, then I start moving up the time frames, 4 hours, 1 day, and then I'll start moving down, because the lower you get, the more challenging it becomes. In the off hours, you really do get some funny market movements. Can the system still trigger some decent signals in the smaller time frames? So there's really kind of a process that I'm looking for. It all starts with the entry, and then it starts with the stop loss, then the profit target, and then even before the different time frames, I'm looking for a really nice way to manage the trade. I don't want to keep my stop loss at that initial stop loss level. I want to take it and start moving it to my entry as fast as I can, but be reasonable about it. You don't want to start choking out the trade. You don't want to get too close to where the market is. So these are all concepts that over the years I've really decided were important issues to deal with. And when I develop a trading system, each one of those criteria has to be met. Is it a good, it doesn't matter what the indicators are. It doesn't matter those technical kinds of things, but there needs to be a good entry. I mean, they say if you have great discipline, I mean, that's 80% of the battle. And it's true to some degree that you have to have great discipline. I mean, it's 100% true. You have to have great discipline. But if your trading system is so bad that you're getting in at all the wrong places, all the discipline in the world is not going to help. If you're taking losing trades, well, you're taking them very disciplined.
Very disciplined at losing.
Yeah. But so you got to have good entries, and you've got to have reasonable targets and good exit strategy. And that's what, those are the key factors to when I'm building a system.
You mentioned something about like discipline, and that has a lot to do with psychology and kind of personal makeup. There's a lot of people that'll talk about trader psychology, like overcoming fear, overcoming greed. Then they'll talk about mass psychology, like Elliott wave theory will talk about mass psychology, like the crowd mentality. Mm-hmm. When you roll all that into one thing, what psychology is it that we as traders have to overcome? Like, is it battling the crowd mentality, or is it battling, those kind of cliche terms like, fear and greed, or is it just sitting down and saying, what is it that I'm really looking for here, and how can I best achieve that? What's your thoughts on that?
I don't think the mob mentality is such a big thing for the individual trader. The individual trader is trading on their own for the most part, and they're trying to take advantage of what the market's doing. The big thing that I found, and it was, of course, an issue for me, and it's an issue for every trader, is patience, discipline, patience, really, that's a word that doesn't come up as often as I think it should, but that's part of the discipline. You have to be disciplined enough to wait. And we do a lot of waiting, especially on the longer time frames. The actual trading that you're doing can be seconds over the course of days. So you're waiting for that ideal entry. And then finally you get that ideal entry. It's confirmed. You're in the trade. That takes, less than a minute to do. And now you're waiting to adjust your stop loss. You're waiting for the market to move in your favor. Okay, now I'm going to adjust my stop loss. Again, that takes 30 seconds. But this could be happening over the course on a 4-hour chart, for example, over the course of 3 days. So the waiting is really the patience to sit there and not do anything if it doesn't require you to do anything. Wait for that profit target to get hit. Don't get nervous and take those profits way too early. Don't do all those things that they seem counterintuitive. Like all you really want to do is be patient. You have to have the discipline to wait for the right setup. And if it's close and doesn't meet your
sorry about that.
No, that's cool.
I am very sorry.
If that's life, man. It's trading at home, man.
Put that on silent. I forgot to do that.
The big deal is for a trader, just making sure mine's off too. The big deal for a trader is the patience. And that's where the discipline comes in. It's the discipline to be patient, the discipline to allow the market to come to you, the discipline to allow the trading system to give you that signal, the discipline to not take the money off the table too soon, the discipline to allow your stop loss to get hit. A lot of traders, they see the market coming down closer and closer to their stop loss. Well, then they start looking for maybe another level of support and resistance to lower their stop loss, just so they don't get taken out. Losing money is a painful ordeal. And if you move your stop loss, well, you're going to spare that pain for a little while more, and maybe the market will turn around. So patience and doing the thing you're supposed to do, I think, is the toughest thing for a trader. You want to get in there. You want to make the big money. You want to do it quick. You don't want to lose. And that kind of intuition will screw you up as a trader. You need to let the system and the market do its thing.
in this is probably a good question that I think a lot of people are probably not thinking about, but they should be. How do you know when it's time to be done for the day? I mean, if the market's moving and you just want to be in there and you want to be making money, and it's like you hit trade after trade after trade and you get, an awesome string of winners and you want to keep going, but where do you draw that line? Where do you say, okay, enough is enough? I've made my money for the day, and you go spend time with your family. Where is that for you?
There's a decision I think has to be made almost before you get into it, like the trading session. For me, I've got a window, and it's between 12 midnight and 3 o'clock in the morning. That's my window. And if anything happens beyond that, well, it's bedtime for me. I'm going to bed, and I'm not spending the day trading. I've got that window. I know the market moves. I know what pairs I like during that time. I know that I do really well during that time. Any other time becomes more of a risk for me. I know what time frames to trade during that time. Not every trader has the same window, of course, or trade the same time frame or whatever the case is. But you have to kind of, that initial learning phase is going to kind of steer you in the right direction. You're going to figure out what works, and but you do have to really allot some time. If you're trading a small time frame, you're going to find areas of the market that are not so good to trade certain times of the day, certain currency pairs at certain times of the day. You're going to start to really fine tune it and bring it down to little windows of opportunity during this and this time. So if you find one that you really like, just stay within that. Because if you start going outside of that time, then you're inviting the losers in. Now, with the time set aside, you bring up a good point about the winners. If you have 2 or 3 winners, do you really want to risk a loser now? Like, you're up really well, like you've done really well for the day. Do you want to risk that? So again, that's another thing you want to decide. How many trades are you going to allow yourself? How many losses are you going to allow yourself? How many wins are you going to allow yourself before you quit for the day? If I get 2 losses in a row, maybe I'm done. No more. Because at that point, 2 losses in a row really starts to tug on the heartstrings in the wrong way. Like, you start getting emotional, you start getting aggressive, you start getting vengeful, you start wanting to make that money back that you've lost. You spent the last 2 hours losing money. You really want to get that back. And it's not good to trade when you're in that kind of situation now. You don't want to be risking. It's careless. You're not going to trade properly at this point. So yeah, I've got myself a trading plan which covers all of that. How many losses? Is 2 losses in a row going to be it for the day? Is 2 wins in a row going to be it? Or maybe I'm just going to take so many trades. I'm trading, let's say, a 5-minute time frame through a 3-hour window. Maybe 5 trades is going to be my maximum, win or lose. Doesn't matter. If I lose 5, then I'm done. If I win 5, this again could weigh against some of the other things. Okay, I'm going to take 5 trades to be my maximum, but if I win the first 2, then I'm done. Or if I lose the first 2, then I'm done. But if I'm winning and losing, I'll allow myself 5 of those, 5 trades, and then I'm done. And then if I don't get 5 trades before my allotted time, before 3 o'clock in the morning comes, then I'm done. Those kinds of things. And it's tough at first, especially when you've lost 2 trades and you're done for the day. You don't have a good night's sleep. Because that's all you're thinking about is you want to get back to the chart an hour later and see, if I took another trade, I could have won. There's always that in the back of your head. But if you stick to this kind of regimented routine, it does work in the end. The greatest thing afterwards is to find, okay, well, I took 2 losers. Now, if I had traded the third one, it also would have been a loser, but I didn't. I stayed out. That kind of validates it. And you'll find that once you've taken a couple of losers, that emotionally you're not in the right place anymore, and the trade you would have take generally wouldn't have worked out, especially if you're a vengeful trader. Because if you've taken 2 losers, that next winner is going to have to be twice the size because you want to make that back. So you're either going to go for twice the pips on your profit target, which the market probably isn't just going to have in it to give you, or you're going to double up the lot size. And if you do that, if you lose, I mean, that's a huge losing day. You had a little losing day, and now it's an enormous one. So it's really important to kind of decide that while your mind is clear. Decide that before you go into it. And while you're trading on a demo account, I think it's fine initially to trade your brains out, to do all the wrong stuff, get it out of your system, figure out, do the stuff you're not supposed to do, and then you'll see why you're not supposed to do that. And then you narrow it down. Okay, well, this is what I'm going to do. I'm going to limit it to so many trades, limit it to so many wins, limit it to so many losses, whatever the case is. I've got a window of opportunity. I'm going to trade just inside there. But you do figure it out. And once you've got it figured out, then stick to that, because you've proven to yourself that this really is the most efficient way to do it. It stops over trading. It stops being stressed out. You can see light at the end of the tunnel, even though it might be a losing day. If you stop trading, the next day you're going to be able to approach the market fresh, not vengeful, not angry, not determined to get that money back. It'll just be another trading day, and you'll perform so much better the next day. And almost always the next day is a profitable day, just as long as you approach it that way. So setting those limits for yourself really it's a big deal. And talk to people if you can't kind of figure that out yourself. I mean, with the new system, of course, I don't mean to plug it, but there's going to be people there to help with all that. So really, it is good to kind of set those outlines and follow them. It's strict. It's the way a trader has to be to make it work.
Now, you've helped tons and tons of people over the years. I think I heard somewhere that it was somewhere in the tune of like 6,000 traders over the last few years. What are the top 5 reasons that traders fail?
The first one would be the lack of patience or discipline. I mean, that's a big one for everybody. If you failed as a trader, that 90% of the time is going to be why. Is the self-control just wasn't there. Second one would be you're risking too much on a trade. Even if you've got a great trading system and your win-loss ratios are good, if you're risking too much, you're risking 5 or 10% of your account every time you take a trade. No matter how good things are, you're going to eventually get that string of losses. It's inevitable. It really is. And that string can go anywhere from 3 to 5, maybe even more losses in a row. And if you're risking too much on a trade, that's just going to clean you right out. You're going to have no more account. And what you're left with, if you do have any account left, you never got the margin call, you're going to have a teeny little account now, something that's going to be very aggravating because, I mean, you've done all that work to grow that account. And as you grow that account, of course, your lot sizes increase. So just because you've grown an account over the last little while, it still doesn't mean that you can take a big hit. I mean, the hits just get bigger and bigger as the account grows. So a string of 4 or 5 losses can really be devastating if you're risking too much. You want to be in it for the long haul and risk, 2%, 1%. Another one would be system hopping. The traders are looking for that holy grail, and they're looking for that 100% or near 100% win-loss ratio. And the first time they get a brand new trading system, and the first time they take a loss, well, the system doesn't work. It's no good. I'm off to the next one. So they go through that cycle for every system. The system works. You get 2 or 3 good trades, and then it has a loss or a loser. And then, okay, that system's no good. So I go to the next one. So you never really do get comfortable with any system. You're always learning a new system. You're not figuring out how the thing works. You're just going from one system to the next system to the next system. And I mean, you're going to live and die that way. Like you really, unless you can start to get familiar with how a trading system works and trust that through that familiarity, that when you do have a loss, the next one is likely to be a winner. Instead, what you're doing is going from system to system and taking the loss, going to a new system, trying to learn that one. Okay, well, it took a loss. Oh, next, that's a horrible way to go. Another one would be, that was number 3. Number 4 would be lack of any kind of trade management. For me, over the years, has become extremely important. And that's different than money management. Money management is how much you're risking on a trade, how many open trades you have at once, kind of thing. Trade management would be moving that stop loss. You've placed that initial stop loss, and as the market moves, you want to kind of follow it in some way to limit the risk. So when you do take a loss, that it's not the full amount. And that really all by itself can double the amount that you win over the course of a month or a year. So, instead of winning $10,000 just by moving that stop loss, you're not taking the full hit on the trade anymore. You can really, 15 or 20,000. So that's a big deal that most traders are overlooking. And because they're not managing their trades, it's a set it and forget it mentality. Okay, there's the entry, there's my take profit, there's my stop loss, click, 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 I'm done, close the computer, off to bed you go. It has its place, but it's really not what a professional money-making trader likes to do. And I guess the last one would be that emotional aspect. For me, in the beginning, I quit for a little while. Like it hit me so hard that it just, like I didn't want to do it anymore. I didn't want to play. And for most traders, I think it's an issue. It does become personal. Like if you've taken all that time, you've invested some money in a trading system, you've done the research, you're taking the trade. Looks good. It looks perfect actually. And you lose. Now, what did you do wrong as a trader? Was it my fault? Was it the market's fault? Why did I lose? And it seems that you lose all the time. Now, that might not be the case, but because the winners are not, the winners are great, but they're not as emotionally striking as a loser. When you get hit, when you lose some money, that is a big deal. And you really do remember those. Like those are the emotions that stick with you. And if you have more than you'd like, 2 or 3 or whatever it is, like it's just, you don't want to go through that over and over again. And that again is another reason why discipline goes out the window, why you start moving your stop loss, why you take profits off the table too early. So those emotional factors are huge as well.
That kind of brings me back around to the first question where I asked you, what was it that made you take that time off? And when you started back up again, what was it what was that turning point for you where you actually started to become profitable after that time off? And you made that, you had that epiphany, you started trading again, and then after 2-3 months maybe, then you started to become profitable. What was that turning point?
That might be tougher to put my finger on. Yeah, it was almost right away too. Like I had that epiphany, I had that realization that I have more control than I thought I did. I can limit my lot size. I think what it was I let the market do its thing without the interference of me. I didn't get in there and try to mess with it. What happened was I was going to allow myself, and I think this is a big psychological thing, was I was going to allow myself to take losers. I was going to allow myself to get stopped out. And I did it on a demo account, which isn't as big of a deal, but still, if you lose, you lose. And I think just letting the systems, letting the market do its thing without my say-so, without my approval. You're in a long trade. Well, how dare it goes against you, kind of thing. Well, if it does, it does. So, that element of control, even though there's nothing you can do about it at all, emotionally you're in there fighting it. Like you're like, oh, how dare it do that kind of thing. But if I I let myself not feel that. Like I allowed myself, I guess, just to take the losses. And it was kind of a learning thing for me. It's okay, well, this now, I guess, is a great opportunity to see, does my trading system really work? Can I really make some money? If this doesn't work out for me, then maybe I've proven to myself that it doesn't work at all. And then I'll be gone for good. But that wasn't the case. Once I allowed myself to let the system tell me what to do, I think that's another part. The system told me what to do. I don't tell the market what to do. I don't tell the system what to do. The system and the market work together to tell me what to do. And if I said, okay, I'll listen, I'll do what you guys tell me to do, and I'll do that. And once that was the case, once that started happening, I started making money. And that happened within months of coming back. And once I've had that epiphany, once I realized there was that element that I had that I wasn't offering before, things did a 180, turned right around.
What what was your family's reaction to, when you told them that you wanted to trade for a living? Like, was it supportive? Was it, kind of a sarcastic good luck chuck kind of a thing? I think when I first started doing it, and I was talking to my wife about it, and she kind of had her reservations. She was like, I don't know about that. I think you better keep your day job. What was that like for you? What was that supportive? Was it, how was your family in regards to that?
They were great, actually. My wife was very supportive. Initially, well, I had a day job, which helped. I wasn't risking the farm. I had a little bit of money put aside that I could put into something like that. I did initially, before I got into trading, I did make some investments that didn't work out. The funds got seized or whatever the case was. But my wife was kind of with me during that period, and she saw, okay, well, it's working. Like, you're making your account is growing. Like, you put some money in with these guys. This is looking really good. And then things happened, and we lost it all through those investment firms. And then I started looking into it. I didn't say too much to my wife about it, but when it did come up, I said, I looked into it. I saw what it is. I've sort of done some research, and she was great. Like, okay, if you think you could do it, give it a shot. Don't risk the house, but if you think
Right.
it's something you can do it. And the thing was, I've always been able to do whatever I've wanted to do as far as that goes. I wanted to start a business. It was always not a problem. And I think the thinking was the same here, was if I decided to do this, then I probably would do okay at it. Not really knowing the nuts and bolts or the ins and outs. Well, the market goes up, you buy. The market goes down, you sell. How hard can that be? All right, well, let's give it a shot. It should work out okay. So there was a lot of support there. And even in the tough times, like, she was the one that said, well, you lost the trade. Don't quit. Like, just keep going. Because I would explain to her what the emotional aspects were, and then I would experience them, but she'd be the one that said, well, no, you got to keep trading. Like, this, don't throw in the towel now. Like, she understood it better than I did, it seemed, in the beginning. So yeah, no, I was fortunate that way. I know that's not the way for most people, or for a lot of people anyways. But for me, it was good.
That's really cool. It's a lot of times it is kind of hard when things are like right up, when we're this close to things.
Yeah.
It's hard for us to kind of take a step back. And it's cool that you had that voice of reason to say, hey, you know what? Relax. It's going to be okay. Yeah. Just keep doing this. Keep at it. You're going to do okay.
Very fortunate that way. And she says, I told you so. She says that every once in a while. Says, yeah, you doubted it, but I told you so. You can do it. So I was lucky that way.
Good. Yeah, my wife is since I started, it took a couple of years, and things have turned, and she said, wow, I never saw this coming. I good job. And it's cool to have that support now. I don't think I had that in the beginning, but
it's tough too, because that's when you need it the most, is at the beginning.
Yeah.
Now it's just, okay, what's your thing? You trade from home, you live the lifestyle. And you fortunately are doing that as well. Like, you're at home, you're living the Forex lifestyle.
Yep.
and there's not many of us that really can do it, but that support I think is really important in the beginning, and too many traders don't have it. And it makes it that much tougher because you don't know, and I don't know about you, but I know for me in my personal life, the people that I socialize with, that I interact with, they don't know anything about trading. I don't hang out with traders. I don't know any traders where I am. All the interaction I have with traders is online. And I go and I have meetings and consultations and things like that with traders. But as far as just the people I hang out with, there's no traders in there. So anytime it ever comes up, there's just, that blank stare and,
Right.
So you're really kind of on your own in the beginning until things start working out. Oh, you're starting to make money. Oh, good for you. And then you get the support. But initially it's, kind of when you need it the most, it's the hardest to find.
Yep. I'm kind of hard-headed that way. Like if somebody tells me I can't, if I can't, then there's, even if I can't, then I'll probably go do it, and I'll beat my head against the wall until I can figure it out.
Yeah.
Just don't quit. I don't know how. And that's just my nature, so it's like you're right. I mean, that was the inspiration. My wife told me to, I'm not sure about this. I'm like, what, you tell me I can't? I'm going to do it anyway.
I'll show you.
Yeah. Right. A lot of traders will use or try and use multiple time frames. They'll be on their time frame and you'll say they're trading the 1 hour chart, and they'll try and take a look at the 4 hour or the daily, or they'll try and take a look at the lower time frames, like the 5 minute and 15 minute. When you're checking, a multiple time frame scenario, what is it that you're looking for? Are you looking up? Are you looking down? Are you looking at indicators? Are you looking at price? What is it that you look at? What are some of the specifics that you're looking for?
When you look up, you're looking for direction. When you look down, you're looking more for entry. So let's take the 1 hour, for example, because it's kind of nice and in the middle. We've got 4 hours, 15 minutes, and we've got stuff on either side. So if you're looking at the 1 hour time frame, when I'm looking at the 4 hour, I'm looking for validation of the direction that I want to trade. So if I'm taking a long trade on the 1 hour time frame, I want to make sure that the bigger time frame, the 4 hour, that isn't looking bearish, isn't looking like it wants to go the other way. I don't want to take a nice position on what's only a pullback on the bigger time frame. The bigger time frame will always win out. So if you've got a setup to go short on the 4 hour and you have a setup to go long on the 1 hour, they conflict there. What's going to happen is the 1 hour is essentially just going to be a little pullback on the 4 hour. The trigger will happen on the 1 hour. You'll get into the trade. It'll start to go your way, and then stop, and then the 4 hour takes over. So what you're essentially doing when you're looking up is looking for the direction. Now, you can do that with price. You can do that with the indicators. Whatever indicator you have that will help you determine what direction the market's going. And it could be as simple as a 2-5 crossover, something like that. You've got the 2 under the 5 moving downwards on the 4 hour chart, but you've got the signal, you've got the crossover going up on the 1 hour. If they're still down on the 4 hour, maybe the long trade's not such a good idea. Now, when you're looking down to the smaller time frames, you're taking a trade on the 1 hour, and you look at the 15 minute, for example, to see, well, is the market going in that direction? So if you're taking a long trade on the 1 hour and the market on the 15 or the 5 minute is going up, then I think the trade is all right. Now, if the market is going down, you don't really want to get in a long trade when the market is doing its little pullback kind of thing, because you'll get yourself a little bit better entry, or you're going to have to sit through a little bit of pain, as the market calls it. You're going to sit through a little bit of drawdown, like you get into the 1 hour trade, but things on the smaller time frame are going the wrong way. I prefer to wait until that finishes. It finishes doing its thing, starts to go in the direction that you want to take the trade, and then get into the trade. So you're looking for the market direction on the longer term time frames, and you're looking for kind of an entry ideal on the smaller. You don't want to be taking a trade when the smaller time frame is going the wrong direction. Stop, wait for a little bit, wait for it to turn around. And then when all three things have lined up, then you're really increasing the odds of having a profitable trade.
I think the last question that I have, and this kind of relates to the multiple time frame scenario. How does support resistance play a factor in your trading as far as like targets or stop losses, or if there's kind of like, if you get a long entry on the 1 hour and everything's looking good on the 4 hour, and you go to the 15 minute, what kind of thing, like where are you looking to take your targets? Support resistance on the 1 hour. Are you looking to avoid, trading into support, buying into support, or buying into resistance rather, on the 4 hour, or selling into support? How does that play a factor in your trading?
The higher the time frame you go, the more you really do have to pay attention to support and resistance levels. If you see a nice level on 4 hour time frame, a nice level of resistance, markets moving up, maybe a buy trade at that 4 hour level isn't such a great thing to do. But then again, though, they're areas, they're not exact prices. Price isn't going to touch the exact price and then change. So if you find these areas, they could be very good turning points on the higher time frames. So if you're looking at a smaller time frame, you're still fairly good to go. The support resistance levels on the really small time frames don't have the impact that they do on a higher time frame. It's always good to pay attention to them. Like, no doubt, like I'm not saying otherwise. Really, you do want to pay attention to where there's stronger levels of support, stronger levels of resistance. I use my trend lines religiously. I'm always drawing a trend line to see. I've found more often than not that price will hit a trend line, especially if it has to move to get to the trend line. If you can draw a trend line and price and the trend line are kind of at the same place where the market is starting to turn around, then usually it'll go through. But if the market's turned around and then has to move a little ways to get to a trend line, that trend line becomes an obstacle. So I do want to pay attention to them as much as I can. But at the same time, though, there are so many levels of support and resistance on any chart. Like, you can open up any chart and just draw a horizontal line everywhere you see a support and resistance area where price has reacted off of. And you're going to have a chart that is full of lines. Like, it's going to scare you into not trading. So, yeah. So the better approach would be to look at a higher time frame, maybe the next higher one, pick out the really strong levels, the ones that aren't sort of levels, but the ones that are validated in more than two places, or at least have two spots, and kind of go from there. Don't let support and resistance levels freak you out to the point of not trading. The trading systems that I've come up with have worked them into it. And there's going to be instances where I don't discuss them initially. With the new system, that's one I don't discuss. They're built in to the system itself. The indicators that I've used take advantage of support and resistance levels, and we go from there without actually talking too much about support and resistance levels. Again, this comes down the road. Don't want to have too much information too fast, kind of thing. If it's overwhelming, it's not tradable. Too much information. That's how you teach somebody nothing, is by teaching them everything. It's information overload. Everything you learn just goes out the window. They are important. They're good to take a note of. Don't let them keep you from trading. And pay attention to the levels that are on higher time frames. The time frame you're on, if it's a small time frame, 15 minute, 5 minute, they're not going to carry as much weight as they do on a higher time frame. The higher time frames, you're going to have fewer levels that you really need to pay attention to. And that hopefully will encourage you to keep trading and stop the paralysis.
Well, cool. That's good advice, Russ. It was really kind of interesting. A while back, I decided to draw out, I went back, I think 4 or 5 years on the daily chart, and I drew out all the different support and resistance levels, and then I zoomed forward to where the current price chart was, and I was like, holy cow. Every time it hit one of those levels this year, it reacted.
Yeah.
And then there was other areas where it just blew right through it. And it's like, well, how do you know which one, how do you know which one's going to hold, which one's not going to hold, and so it does get really confusing. And if you don't know how to handle it properly, then it can cause a lot of problems.
Well, there's two ways to trade those levels. You trade the bounce off of the levels, or you trade to break through the levels. You don't know what is what before it happens. I mean, you have to allow that trading system to tell you. If that's the case, if it's built into your trading system, support and resistance levels are part of your system, then you'll look at it maybe a little bit differently. But at the same time, though, the signal is the signal. And if support and resistance levels are a part of your trading system, that is awesome. If they're not, then don't stop trading because you don't know how to deal with them. Just do what the system is telling you to do.
Mm-hmm. Well, cool. Thank you, Russ, for taking this time out. I know that you are a busy guy, and you're looking very forward to your upcoming system. So
I'm so excited. It's going to be great. It's a great opportunity to spend more time with a lot of traders, and that to me is one of the best things. I have a lot of fun with it, and thank you for having me here today. It's been awesome spending some time with you.
Absolutely. Well, you too, Russ. So thank you very much, and I will. I'll catch you on the flip side, man. Have a good night.
You take care. Thanks again.
All right, you too.
Bye-bye.
Bye.